In this video, I want to discuss the gold market and why, even though gold is up about 30% or so for 2016, we still could be on the cusp of a massive rally in gold prices over the next couple months. Bull markets in general tend to go through phases where they have a big up leg, then a consolidation phase, which leads into the next big up leg in prices. And we can see that in gold back in 2004 and 2005, after gold rallied into the start of 2004, we had about a year and a half long consolidation process, which produced a massive up leg into the middle of 2006, where the price of gold spiked higher and got to about 25% above its 30-week moving average before the next consolidation took place. And again, this process was repeated in 2006, where gold made that top, then consolidated again for about a year and a few months before breaking higher once again into 2008 in a massive up leg. And this up leg was terminated um, prematurely, potentially because of the financial crisis. And notice that gold only got to just below 20% above the 30-week moving average before the correction started taking place. And once again, in the 2008 to 2009 consolidation process, gold consolidated for about a year and a half. And notice how the down leg and then the up leg that followed it kind of produced this big basing pattern, which then produced a 2-year up leg in gold prices leading into 2011, where the price of gold reached to over 20% above the 30-week moving average. And this is what kicked off the 5-year bear market in gold prices after the 2011 top. Now, what's exciting about gold prices currently is that after the bear market in gold, which started in 2011, the bear market really ended for the most part. I've discussed this in past videos you can see on my channel in the middle of 2013, but pressure on commodities and a surge in the US dollar produced a final low in gold at the end of 2015. But in general, this created a large basing pattern in gold, which the base was completed with the rally that we've seen in 2016 up until now. And this entire base is about a 3-year base. So this is the biggest base in this gold bull market, which kicked off in the year 2000 so far. So the potential for a rally from here is enormous. And there's no resistance really between 1350 and about 1600 in the price of gold. So even though we've seen a sharp rally so far in 2016, there's really no reason that gold can't continue to surge higher and move higher rapidly, especially since gold is in a seasonally strong period of the time of year over the next 2 months, where August and September are by far the biggest positive months for gold prices during a calendar year. And looking at the gold stocks have kind of completed the same pattern, where they completed most of their bear market damage in 2013, had another low to start this year, and then have gone straight up this year in this absolutely incredible rally. And even though they're hitting this, kind of resistance point from the final low in 2013, just like gold, there's no resistance once they get past that until about the level of 400 on the HUI. So there's really no reason that this can't continue higher, even though the gains have been massive so far. And this is where, being right and sitting tight in a bull market works a lot better than trying to pick tops, because anyone that's tried to pick tops so far in these gold stocks has sold out too early and missed out on massive gains. So, especially people that are trying to time the market could be left out as the market continues higher, because bull markets tend to leave as many people behind as possible before they can actually react and get positioned in the bull market. And finally, the US dollar is starting to trend lower below the 30-week moving average. Once again, as of last week, it closed below the 30-week moving average, and it's still completing the stage 3 topping process. Notice how the US dollar is underperforming the S&P 500, which it didn't do for a couple years during this massive rally. And this is another sign that the US dollar as a strong currency is really going away, even though a lot of people in the media are still somewhat enthralled by the US dollar. So overall, as I said, even though gold has had a humongous year this year, the real fireworks could be just getting started as we get into the seasonally strong period for gold and we start to break out of this monster 3-year base that really is going to produce a phenomenal upleg in gold, which could last even multiple years from here, even after the next few months, once we get past this resistance from 2012 and 2011, which might take a little bit of time. We could see the upleg resume into next year and potentially new all-time highs for the price of gold.